Kia ora, good morning, happy Friday. I am Micro Markets, wearing blue this morning. Conscious effort to balance out the pink. Yeah, a YouTube title card overview thing, if you've ever looked at it, heavily skewed toward the pink shirt side of the equations, so I'm advised. Shout out to Jeff. Anyway, yeah, I'm kind of a mathsy guy, and equations work best when they are balanced, so light blue, baby pink, yeah. This is Kiwi Bank Markets in a Minute, that thing where we exclusively discuss the financial markets for exactly 60 seconds. The New Zealand dollar, it's steadying near 69. Nice. Yeah, the bird traded a bit either side of that figure overnight. Water treading, consolidation, not doing much really. It is, of course, off from the 2020 high from earlier in the week, earlier is that way, 69.45, but it's still elevated. And getting the Kiwi to these elevated heights, most recently at least, has been vaccine headlines. In fact, overnight we had tentatively positive noises from a third pharma company on the vaccine front, AstraZeneca, Pfizer, Moderna, AstraZeneca, if you're keeping a running tally. Now, that latest edition, they don't appear to be as far along the testing road as the first two, but they are seeing positive signs. So, that's good. Yeah. But Kiwi, a risk asset, is off the highs. Globally, equities had a decent skew to the south overnight, commodities were under pressure, and the greenback advanced. So, yeah, varying degrees of risk-off themes across an assortment of asset classes. And that's despite the positive vaccine news. And that is basically because it wasn't enough to offset the negatives. Yeah, markets increasingly focused on new COVID waves cresting across the Northern Hemisphere. I'm pretty sure cresting is something a wave does. Yeah, anyway, COVID and increasing tensions between China and the members of the Five Eyes Agreement. That is the US, Canada, the UK, Australia, and us, New Zealand. Yeah. That is a complicated story. These are all complicated stories, and that's why we linked people who are much better at telling them in firsthand. Yeah, we're just here about the markety kind of stuff. Links in firsthand if you're interested. Back to the markety kind of stuff that we are good at. Yeah, this week has been a real buy the rumour, sell the fact sort of scenario. Buying risk assets on positive vaccine headlines, and then selling on the fact that, yeah, we're still a long way away from a resumption of normal. And I personally define normal as, you know, someone blowing on a birthday cake and everyone eating it without a second thought. Yeah, crazy. And then there's always another risk to drive the market. China tensions. Yeah, looks like that could become a primary sentiment driver again. On that, and currencies, merging those two, China news, for good or ill, usually impacts the Aussie dollar a little more than the Kiwi, and that played out overnight. At the margin, but that margin was still enough to see Kiwi-Aussie, yeah, trade fleetingly sniff the 95-cent mark. Highest level since April of this year. Yeah. Right, I reckon that is about enough for this morning. Also LinkedIn firsthand, and maybe over here somewhere. If you're watching this on YouTube, Jared and Mary Jo from Kiwi Economics, they held a live economic update webinar yesterday. Click the link thing to watch the replay. It is good stuff, yeah. And if that recommendation isn't enough to entice you to click, they talk about house prices. Yeah. Have a great weekend. Kia pai tō rā.